don't think stablecoins are the real reason we're seeing some pretty meaningful pumps in a number of coins. I think it's momentum, it's the halving cycle, it's the ETF, which BlackRock will get approved. Which day, I can't tell you exactly, but they're going to get approved. Whether anyone else does, I hope so, since I own pieces of two of the companies that are ahead of them in line. But I'm doubtful that they will get approval. I think BlackRock will get it. And I think that's going to bring tens, probably hundreds of billions of dollars into Bitcoin. And some of that's going to flow down into other coins as well.
Over the past few months since BlackRock, the world's largest asset manager, applied for a spot Bitcoin exchange-traded fund in June, there's been a host of bullish sentiments about how such a product could encourage more institutional investment in cryptocurrencies. At the moment, thousands of institutional investors managing trillions of dollars are unable to directly invest in cryptocurrencies like Bitcoin as a result of the stifling regulatory environment. Then in comes BlackRock, the world's largest asset manager with $9.42 trillion in assets under management as of June 30, 2023. In addition to being such a huge Wall Street giant, BlackRock has a lot of influence in Washington, evidenced by its 575-to-1 exchange-traded fund approval rate. According to Mark Yusko, a renowned hedge fund manager and the founder of Morgan Creek Capital Investments, it's a foregone conclusion that the U.S. Securities and Exchange Commission will approve BlackRock's application. With that approval, at least $30 billion will pour into the cryptocurrency industry in no time. But $30 billion is just Mark Yusko's base case. The hedge fund manager believes the amount of new investments into crypto could go much higher, going into hundreds of billions of new investments into Bitcoin and other cryptocurrencies. We will now bring you clips from Mark Yusko's latest, November 15, interview with CoinDesk, during which he discusses the inevitability of crypto and other digital assets, BlackRock's ETF applications, and what they mean for crypto, central bank digital currencies, and Solana. Please ensure you stick to the end so you don't miss any important information, especially BlackRock's latest spot ETF application announcement. Also, give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos. Thanks and enjoy the video.
I don't know that it's driving the crypto markets. I mean, look, stablecoins are here to stay. We are going to move to a digital world, whether the incumbents, financial services companies like it or not. Name a technology that came along that got critical mass that went away, right? Horse and buggy manufacturers didn't really like the automobile. The train companies don't really like airplanes. But I didn't take a horse and buggy or a train yesterday when I flew to New York. I flew on an airplane. So this isn't as inevitable as the internet. Phone companies didn't like the internet. They tried to pass laws to make it illegal. Imagine that. And Al Gore killed that bill. So he didn't invent the internet, but he certainly helped it. And look, stablecoins are a great way of transferring value quickly, efficiently, and without worrying about market price. And I don't know if you've ever thought about this. I think about it from time to time. Banks are closed more hours than they're open. The markets are closed more hours than they're open. And digital assets never sleep. I could transfer you USDC right now if I wanted to, if I could get to my phone, but I'm using my phone since I forgot my computer today. But so I don't know. It's a long-winded way of saying I don't think stablecoins are the real reason we're seeing some pretty meaningful pumps in a number of coins. I think it's momentum, it's the halving cycle, it's the ETF. BlackRock will get it. And I think that's going to bring tens, probably hundreds of billions of dollars into Bitcoin. And some of that's going to flow down into other coins as well. The incumbents would love if the world went to CBDCs. There was a big announcement this morning that Apollo and a bunch of others are doing this thing to help with the asset management business with JP Morgan and Avalanche. And okay, great, but that's a private chain. JP Morgan would love you to use a private chain. CBDCs, the reason I don't mention CBDCs is I think they're pure evil. I think they're one of the most heinous things you can imagine. Imagine that the guy in charge of the BLS, I'm sure you've seen Augustin, he's a kind of scary guy. And he says, of course, we should control how you spend your money, when you spend your money, if you be allowed to spend your money. Programmable money that a government can control is a very scary thing. Open and free markets are less scary to me. So I like stable coins. I like digital assets. I love Bitcoin. Look, fiat isn't going away overnight. Now, it will eventually go away. I mean, we've had one money for 5,000 years. Money is an asset that exists in the absence of a liability. That's gold. Gold has been money for most of human history. And it's the only thing that you can take a single ounce from Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today, and you exchange that ounce and you get a fine person's suit. It's been a perfect store of value. There have been 775 paper currencies, all kinds of countries all around the world over the millennia, and 3/4 of them no longer exist. All the others are down 97 to 99.99999%. And all of them will eventually go to zero because governments can't help themselves. They just spend their way into oblivion, and their currencies have to be devalued because that's the only way out. So digital assets, the interesting thing about them is take Bitcoin. It's digital gold. It's equally scarce. Stock to flow ratio is fantastic. And it's more divisible and more portable. So I believe it will replace gold as the base layer of money. All money sits on top of gold. Central banks own gold. They issue debt, issue currency on top of that. That's the way the world works. I think Bitcoin replaces that. Fiat's not going to go down without a fight. And to your point, they're going to try to digitize it and make it centralized. But centralized is the opposite of what we all want, which is decentralized. And we will live in a decentralized world in the future. It's just going to take a while.
During the interview with CoinDesk, Yusko also talks about Solana. The native token of the Solana blockchain network has been one of the biggest winners of the ongoing cryptocurrency rally. Solana started the year below $10 per token. As of press time, the Layer 1 token is trading at $64, a 540% increase year to date. On Tuesday, during an interview with CNBC, ARK Invest CEO Cathie Wood talked about the strength of the Solana network. Solana is doing a really good job, Wood said. If you look at Ether, it was faster and cheaper than Bitcoin in the day. That's how we got Ether. Solana is even faster and more cost-effective than Ether. Several analysts are also describing this run as a price correction after a long period of undervaluation. Solana has been on a roll for most of the year. After Wood's statement, it rallied over 18% in a single day. Like Wood, Yusko is also very bullish on Solana and believes the rally has only just started. Here are more clips from the interview.
What do you make of this new interest, this renewed interest in the Solana blockchain and its native token?
Jen, I'm taking full credit, 100% credit. I made this happen. So in September, early September, I made a comment on a show that Solana had vaporized transactions during the last cycle. Oh my God, the community went ballistic. They were so mad. Like we never rolled back transactions. I said, I never said you rolled back transactions. I said because of outages in the protocol, the transactions went into the ether and never got settled. And unless you entered that transaction, it never happened. Now, a couple people actually were positive and said, hey, let us help you understand this. This guy, Happy Pirate from the Netherlands, sat me down on a Zoom and walked me through all the changes that they've made. What I think is happening is a couple things. One, they did fix some of the problems, so that's a positive. Two, we had Breakpoint, and Breakpoint is always a pump fest, so that certainly is part of it. Three, we didn't see the FTX cash get sold. The bankruptcy trustee had threatened to sell all their Solana, and they haven't done that yet. That will put some pressure on at some point. And then actually, there's some building going on. One of the things that I love about right now is I've been to a bunch of events. I went to Permissionless, the ETH event, and I went to the Bitcoin event, and I went to a Filecoin event, and they're down 80, 90% in terms of people. But the people who are left are the builders. So the speculators are gone, the gamblers are gone, the crypto bros and gals are gone. And what we have left are people who are building real things. That's super exciting. And if you think about history, the great companies are built in bear markets. They're not built in bull markets because capital flows too freely. You think about Breakpoint 2 years ago at 21, right? $1 million after parties and the price at $260. That was the peak, right? When you're spending $1 million on an after party, bad things happen after that. So when you have a nice, I went to a party at Bitcoin Miami this past year, and it was at a little taco shop after renting out a big mansion on the water 2 years ago. So when you're down to that level, good things happen. I have to admit, we sold most of our Solana. We were very early investors, and I give Kyle all the credit. We invested in Multicoin, and they bought us a bunch of Solana. And so we probably one of the best investments I've ever had in my career on a multiple basis. I think we made about 1,000 times our money. But we did sell most of it, but we still have a decent amount and probably hold it for a while.
In other news, BlackRock has officially filed for a spot Ether exchange-traded fund with the United States Securities and Exchange Commission. The ETF, dubbed iShares Ether Trust, seeks to reflect generally the performance of the price of Ether, according to the Form S-1 filed with the SEC by iShares late Wednesday. You will recall that BlackRock registered the iShares Ether Trust with the Delaware Department of State Division of Corporations about a week ago. Hours after the incorporation, NASDAQ filed for the proposed ETF, all in preparation for the big announcement. It's been 5 months since BlackRock applied for a spot Bitcoin ETF. Since then, Bitcoin's price has gone from $25,000 to over $37,000, a 48% increase in the crypto asset's price. Do you think the same is about to happen with Ether? If that happens, the largest altcoin's price will go from just over $2,000 per token to around $3,000. Please drop your replies and predictions as well as your comments on Yusko's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.